Welcome to Trading Nation, folks. I'm Eric Chemi. Today we're joined by Ari Wald and Chad Morganlander. Ari's here with a note telling us about why we should buy an already overbought market. I'll turn it over to you, Mr. Wald.
All right, thanks, Eric. Yeah, the title of this week's report is When Overbought is Bullish. Now, this is not making the case that this is the buy now level. I mean, we are saying that tactical conditions have become less attractive than they were a month ago. What we're saying is that we're seeing the type of underlying strength that tends to continue over a longer term period, that this is not a top and that we want to continue to buy pullbacks and stay invested in this market. Now, for instance, the percentage of overbought stocks in the Russell 3000 is coming off its highest level since November of 2016, after the last year's U.S. election rally. Now, we did crunch some numbers on this, and since 1995, this level's only been attained about 2% of the time, and it's been followed by above average forward returns. Historically, the uptrend does indeed continue when you get these types of levels. So from a near-term basis, yes, overbought. Perhaps you can be more selective until those tactical conditions improve. But what it's telling us is that we still want to be invested in this market. From an investment perspective, this advance is intact, it's healthy, and likely to continue over the coming quarters.
Chad Morganlander's here from Stifel. Chad, you heard what he had to say. What do you think? Do you agree?
Well, in the short run, perhaps that's the case going into the end of the year. We were overweight equities. About a month ago, what we did was we reduced our equity exposure back to more of a balanced, and like Ari said, we are more selective. The concerns I have going into 2018 is that earnings growth won't be as vibrant as everyone's expecting. We believe that also QE is now turning into quantitative tightening, a reduction of the balance sheet, as well as increases of interest rates. We do believe you'll get 3 interest rate hikes over the next 18 months. That's going to be a negative headwind for actual multiple expansion. And when we talk about valuation, either if you look at it from a PE multiple or a market cap to GDP or sales to enterprise value, from a 20-year perspective or a 30-year perspective, you are stretched from a valuation from the valuation side. So we would be a bit more cautious at this point in time.
Ari, I want to just bring it back to you real quickly. What about the inverse? It's just a hypothetical. I know we're not in this situation now, but if we were at lows and you had all these oversold stocks, do you think you would get the same kind of thing where you would say, oh, you got to keep selling? I mean, I know you probably didn't crunch those numbers, but it's just more of a theoretical exercise. Do you think that would make sense if we ever got to that?
We actually have crunched the numbers, not necessarily on this indicator, but similar ones looking at how overbought or oversold the breadth of the market is. And what's interesting is that oversold does tend to be mean reverting. You want to buy when a lot of stocks are oversold. Overbought is not mean reverting. That overbought conditions tend to continue, and that's the case that we're making, that we don't expect that mean reverting opportunity, which you do get on the downside. That the time to get concerned is when you're making new highs, but there's fewer stocks participating, when momentum begins to taper, when credit starts to deteriorate, when the leadership of the market shifts to a certain degree, and we're not seeing any of that. So there's usually some sort of a topping process in play at the reversal at a top, while the bottom reversals tend to be much quicker, and you can buy those deep oversold conditions.
All right. Well, Ari Wald, Chad Morganlander, thanks for joining us here on Trading Nation. To everybody watching, I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.